If you want to see the market forecast first, go to slide 6. Howdy swings. The JOLT report and the Beige Book weighed on the markets today, negating the market's efforts to recover Tuesday's losses. However, even taking into account their impact, the market's downward pressure seems to be an overreaction to the bad news. Will the markets rebound on Thursday, when a slew of economic data will be released? Let's take a look at the Fullhapce daily swing price forecast. Let's review daily market index movements. Market indexes have been boring and mixed, with the VIX up 3% today after a 30% gain on Tuesday. SPX, 5,520.07, minus 0.16% down. Dow Jones, 40,974.97, 0.09% up. NASDAQ, 17,084.3, minus 0.30% down. Russell 2000, 2,145.4, minus 0.38% down. VIX Index, 21.32, 2.9% up. Let's look into daily sector performance. Healthcare, casinos, insurance, certain REITs, aerospace/defense, utilities, consumer staples, and transportation were bullish. Housing, materials, energy, consumer discretionary, regional banks, cable, and technology were bearish. Let's take a look at some of the reasons why. After Tuesday's sell-off, stocks tried to stabilize, but the JOLT report and Beige Book exacerbated growth concerns. While the Fed was fully justified in raising rates by 50 basis points on September 18th instead of 25, the market is much more sensitive to growth than monetary policy. Let's talk about a few things to consider. The global monetary policy easing cycle continues with rate cuts in Chile and Canada. The July JOLT report and the Beige Book are not signaling that the economy is crashing, but they do provide enough evidence for Chairman Powell to hike 50 basis points on September 18th. China continues to spend to stimulate its economy. Here we present the daily market forecast for swings. Weekly market bullish potential is strong. Daily market potential became strong bearish. Volatility increased. As a result, daily market could be a mixed bag as several of our forecast indicators are conflicting with each other. SPX 5550 became a new resistance, and 5,500 became a support appeared in our calculation. Investors seem to have concerns about September's historic record of bad market performance. Even though there was an attempt to recover the Tuesday loss, tight room for the market move worse than expectation is likely to scare the market. As a result, it looks like we will see a lot of downward pressure over the next few days. While multiple indicators are pointing in opposite directions, making it difficult to predict, we are leaning slightly toward the market closing higher on Thursday. However, if depressed sentiment is suppressing the weekly bullish potential, a rally may not come until there is an event that benefits investors. Let's explore some additional insights. Most of the factors behind the stock market's August rebound remain in place, but there are some concerns, including bad earnings reports from a few companies and the risk of a slowdown in the economy. While the economy is entering a phase of slower growth, overall economic activity remains strong. As seen in the reaction to the weak jobs report and disappointing manufacturing data in early August, the stock market is sensitive to negative news due to high valuations. Let's look at the counterarguments. The opposite scenario is that the market declines on Thursday and moves to the next support level at SPX 5350. In this case, the market may continue to fall after a weak attempt to recover, so traders may want to consider further protecting their assets and keeping their optimistic positions to a minimum. The rationale for this scenario is as follows. The market is stuck in a vicious cycle where large price declines lead to more selling, which leads to even larger price declines. Therefore, stock prices are likely to continue to fall. The Beige Book showed that U.S. growth is facing challenges, including a slowing job market, weak manufacturing, and declining consumer spending. The JOLTS report showed that the number of jobs fell significantly to 7.67 million in July, while layoffs increased by 202,000 from June to July. China's August Caixin Services Purchasing Managers Index, PMI, fell short of expectations, adding to the country's negative growth data. Consumption weakness is evident in various corporate reports. The regulatory environment in the U.S. is unfriendly to mergers and acquisitions. highlighted by the White House blocking a Japan-US steel deal. All things considered, we believe the opposite scenario is also possible, as the market is more sensitive to bad news, so traders can take this into account when setting up positions. The conclusion is as follows. The bullish potential for the daily market is daily market potential became strong bearish, volatility increased. Tight room for the market move worse than expectation can cause psychology to suppress strong weekly bullish potential. A rally may not come until investors have a helpful event, and we will see a lot of downward pressure over the next few days. It may be prudent to sell a bit when it hits 5,550, sell most when it hits 5,650, and whenever it hits the resistance, add protections. Also, traders may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.